Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Egon von Greyerz of Matterhorn Asset Management in Switzerland. Egon, welcome back to the Keiser Report.
Thank you very much, Max. It's a great time to be here. It's great from the point of view that we have so much to talk about. It's not great for the world, sadly. But
yeah, well, let's get into it. I wanted to start off by asking you about what's happening in France, because in France, they are limiting people in terms of how much money they can take out at the bank at one time. They've limited to 1,000 euros. It was like 2,000 or 3,000 euros. They're getting very involved in people's day-to-day business, how they're spending money. You can't spend a certain amount of money without alerting the authorities. You can't take out more than 10,000 euros a month without alerting the authorities. It seems to me that France knows that 0% interest rates are coming, that they're going to start charging people to keep their money at the bank, and they don't want people taking that money out of the bank and sticking it into your vaults in Switzerland or even into cash and putting it into the bank. Isn't this a pernicious form of capital controls? And talk about this a little bit.
absolutely, we will have worldwide capital controls. You know, right today you're a criminal if you go to the bank and ask for cash. Most banks in the world ask you a lot of questions, and if you want a bigger amount, they will stop you. Although it's actually not illegal in most countries to take out bigger amounts, but still, they will do everything they can to stop you. The banks are in a mess. France is the next sick child of Europe, in my view. They will have massive problems, and exchange controls will be part of their solution. It's not a solution, of course.
So in other words, you've got in Europe countries going bust. Obviously, Greece has gone bust. As Yanis Varoufakis has said, we're bust. So there's no point in talking about what we do if we go bust. We're already bust.
Absolutely.
In Italy, it's a terrible situation. Ireland went bust. They got bailed out, but now it looks like they're going to go bust again because there's a housing bubble. Yeah. But you think France, now this contagion, if you will, is going to hit France. Talk about this a little. Yeah,
no, I think the French economy, I mean, their deficit is among the biggest in Europe still. They have unions which are not going to accept any austerity, and France will have austerity like any country needs to in a deficit situation. You look at Greece, Italy, but no country will accept, no people, including the French especially, will accept austerity. Therefore, I see the problems being bigger in France than anywhere else, because they will actually have unions that are going to just stop all activity.
Right, so French, the France ability to do any reforms at all is pretty well dead in the water. You know, going back to Sarkozy, when he was first in office, tried a whole suite of reforms. He was booted out. The people decided they didn't want reforms. Now, under the current administration, under Hollande, he's been not effective in any way. Now they're thinking about bringing back Sarkozy. I lived in France for many times. It seems that the second they put a new president in, they immediately turn on him, and he becomes the most unpopular president in history. I mean, the French culture itself is something to contend with. If we can put it on those terms, you know, in Europe, the countries are remarkably different, culturally speaking. France, Germany, Greece, Switzerland, they're very, very different. The French seem particularly intractable when it comes to this type of meaningful reform, do you think?
Yes, they won't accept it. But I forecast a long time ago that every country, certainly in Europe, will change governments regularly now, because any new government that comes in promises the earth. They can't keep it. Look at Greece now. Either they're going to compromise or they have to leave the EU. I think they should leave the EU, default, install a new currency, the drachma, start from fresh again. But of course, the Troika will do everything they can to stop them, because they know that it will lead to Italy, Spain, Portugal asking for the same conditions, if they actually, or either asking for the same conditions or also starting to have financial collapse in their country. So I think that we will now see parties coming in and out on a regular basis in Europe, and no party will last, because they promise the earth when they come in, and when they come in they can't deliver, they'll be thrown out, and therefore we will have a form of anarchy starting in politics, because politicians will not ever be able to rule the country properly.
Now, in the case of Greece, the folks in Greece, they want two things. They want to be part of the euro, and they want the end to austerity. it seems like these two goals are mutually exclusive. Either you want the end of austerity or you want to be part of the euro. You can't have both.
Yeah.
Is that a fair statement?
It's fair, and this is what has happened to Europe today, that people are used to being spoon-fed by the government and looked after totally. So they want everything, but they don't want any austerity. Of course, we know the two will never reconcile. Greece is bust, as you said. All of Europe is bust, certainly Southern Europe. Therefore, in my view, there is no solution. Of course there isn't any solution. They will find a compromise short term, but long term, I mean, in my view, and I said it when it started, the European Union will break up. The euro is an artificial currency that should never have been there. It won't last. It's only a question if some countries will still have it for a while.
Now, Egon, you're at Gold Switzerland, is the company. You're in Switzerland. And the business model is a very interesting business model because basically you can sit back and just wait, because throughout history, every fiat currency that's ever come has ended in disaster and worth nothing. And throughout history, gold has always been the currency at the end of the day. Gold, we always come back to gold. So basically, you have the Gold Switzerland in Switzerland. Right now, there's a love affair with fiat again, whether it's the euro or the dollar was making a move much higher. But aren't we in a very strange situation where the supply of dollars, the supply of treasury paper is at an all-time high, and yet the price goes up, whereas the demand for gold globally is one of the strongest periods in history, and the price has been trending sideways to lower. Doesn't that repudiate everything we know about economics?
Yeah, you're making a lot of important points here. First of all, the demand for physical gold is very high, and there's actually a shortage in the market of physical gold. Now, because what has happened, as you know, is that all the gold goes from west to east. Before, when bullion banks got gold from central banks, leased gold or sold gold, is kept within the London pool or in New York. Now, China is the buyer, and they take delivery. So that the physical gold market is now strained. But the paper gold market is, of course, 100 times the physical, and therefore the governments or central banks and some financial institutions, the big banks in the US, Goldman's, JP Morgan, etc., they are manipulating the price and pushing it down continuously. That's going to probably end this year, in my view, and when the market sees that there actually is no gold to deliver against the paper longs, they are going to go. These banks are not going to be able to deliver. They will actually have to cash settle, and they will lose a lot of money.
Okay, first of all, let me jump in and say you're calling for a gold breakout and a breakdown in paper currencies this year, 2015, and your track record in this regard is quite stellar. You're not making this prediction lightly. I mean, this is coming from somebody who's really at the nexus of the global gold market. And so your thought is that this year we do have this reversion to the mean, this sudden re-evaluation on the global scale where fiat currency resumes its natural value, which is not very much at all. And we have this gold then coming back and assuming its mantle as the top currency. What's going on with the top 1/10 of 1%? It seems to me that once they're flirting with these fiat currencies, the high-tech stocks and the New York Stock Exchange, et cetera. But once the psychology changes, they can very quickly get into gold, and those who are left on the sidelines will be out of luck.
Absolutely. And especially the first ones will be the ones who hold the ETFs, hold the paper gold. They won't get any gold. If you have good connections, because remember, there's about 2,500 tons produced every year, and if you buy direct from refiners, which we do, you will always get gold. But there won't be gold for the masses. I mean, I can see now, I'm in the hyperinflationary camp. I believe that you look at the money printing, and let us just look at the money printing now. Japan, I mean, in my view, Japan is going to the country will survive, but the economy will sink into the Pacific. They are not going to survive. There's no chance of it. 250% debt to GDP now, growing, printing, a trillion or quadrillion yen debt going up, no effect on the economy. China, as you know, has gone from 2 trillion to 28 trillion, their borrowings in this century. They will have problems, and they have problems already. And of course, that has repercussions for the whole world because they were buying all the commodities from the world. Now we know commodities are crashing, and the Baltic Dry Index, which is a good example of actually what's happening in world trade, is at an all-time low. So, you know, we talk about Europe as the only problem child, but I mean, I see the US as the big problem. The US, everybody's now optimistic, dollar has been strong, the US economy is strong. Every single figure is actually now worse than expected in the US. Stock markets are, the Russell 2000 is on a 90 historic PE. But everybody looks at future PE and they exclude all the items there. So they talk about lower. The real PE is 90. The S&P's on historic basis for last year, the last 12 months, is over 20.
When companies buy back their own stock, doesn't that totally distort PE? Because they're taking away less.
This is why they're doing it.
Right, so they get 0% interest rates to borrow money at zero.
Absolutely.
They buy back their own stock.
Absolutely.
So there's less stock around.
Yeah.
So now earnings look better because it's divided by less stock.
Yeah.
And they say our PE is not that bad.
Yeah.
But you're saying if you take out the gimmicks, you take out the junk, you end up with a 90 PE
on the Russell 2000.
on the Russell 2000, which is the broadest measure of the index.
On the last 12 months.
Which is really freaking high.
Gap.
Is that high? That's higher than Matterhorn. Matterhorn.
It is higher than Matterhorn. That's an achievement.
Unbelievable. We have to go. But we're going to come back for part 2 if you can stay with us.
Yeah, okay, I can stay.
Okay. Welcome back to the Keiser Report. I'm Max Keiser. Time now to once again speak with Egon von Greyerz of Matterhorn Asset Management in Switzerland. Egon, welcome back to the Keiser Report.
Thank you, Max. Always a pleasure to be with you.
All right. Now, we finished up in our previous discussion talking about how things like price-earnings ratio do not give a good picture at all in terms of what is going on in the stock market. We also talked about the fact that the price of gold is suffering because for every ounce of gold that trades in the physical market, there are 100 ounces that are traded in the so-called paper market.
Yeah.
I know that in the silver market, for every dollar that shows up to buy, there's $50 that shows up to sell.
Yeah.
And so you have this huge resistance to get that price higher. And a lot of it is focused on these, like the COMEX in New York, and there's always this idea that if enough people show up and want their physical delivery of their gold, of their silver, that these markets, maybe the LBMA here in London, they get overwhelmed with requests, and that ability to keep the price suppressed disappears, and we see the true price, which would be a lot higher if all this manipulation were not taking place. Yeah. Can you talk a little bit about that?
Yeah. You know, we move, obviously buy gold for clients, but we also move gold for clients from banks to private vaults outside the banking system. So, and we still see when banks are supposed to deliver the allocated gold bars that they actually don't have them. And they take time to try to go and find gold in the market and buy. They still can buy them. So, you know, the banks, even allocated gold is not always there. And that's why people should never keep gold within the banking system.
How many tons of gold are mined every year?
2,500 tons, and then you have...
Come out of the ground every year.
Come out of the ground.
And what's the demand from China last year?
The demand from China was over 1,000 tons.
And what was the demand from India?
India, 900 tons.
That's 2,000 right there.
Yeah, that's 2,000.
How many are going into the ETFs?
Well, ETFs, of course, have taken out gold and reduced their
paper gold.
Paper gold. But I mean, the physical demand now in the last few years has been a lot bigger than the production. Okay, you have also scrap gold, which is another 1,000 tons normally, but 3,500. But still, demand has been higher than that. So this is why the central banks have continuously reduced their gold holdings. There's no question about it. You know, I mean, now. UK is in the statistics as a gold exporter. I didn't know there was any gold production in the UK. Did you?
No.
No. So there isn't, of course. is the bullion bank gold, the 400-ounce bars that has either been sold by central banks or leased by central banks that are now being bought by China. They're moved to Switzerland, which refines 70% of the gold bars in the world.
Wait a minute. So when I see that photo of the Queen walking around the gold vaults here in the UK, these are the big 400-ounce bars that are used in international trade. The UK has a line item on their budget that they're exporting what little gold they have left?
That's correct. That's correct.
Well, isn't that unconscionably irresponsible by Mark Carney at the Bank of England and George Osborne, the Chancellor?
Well, of course it's irresponsible, but you know, they're holding gold for other central banks.
Gordon Brown sold 60% of the gold. He got rid of it at the lowest price in decades. And they're continuing to sell.
Finance ministers are perfect market timers, as you know. The Swiss did the same, actually. At the bottom, they sold most of their gold. So that's the best sign. And now, all the West getting rid of their gold as it is, that's also a very good sign that we are seeing a bottom in the gold market, in my view. So, yes, so these bars go to Switzerland. They are broken down into kilo bars, and then they go to China and to India. So that's what's happening. In my view, there isn't a fraction of the gold within the central banks. Western central banks are supposed to have 23,000 tons. I don't think they have half that. So that will be, when the world discovers that, as you know, they're never audited, these central banks. Every Fed was audited by Eisenhower in Eisenhower's days in the 50s. So, yes, I mean, that will affect the gold market, so people got to have their gold now. But in my view, I mean, if we look at the bigger picture, because gold in itself, you know, gold is just a heavy piece of metal. But in times when governments totally mismanage the economy, it becomes an extremely valuable piece of metal.
Well, let's talk about governments mismanaging the economy. Cyprus had actual bail-ins. They confiscated money from people's bank accounts. France is now imposing strict capital controls. Greece wants reparations from World War II, including gold, 100 tons of gold that Germany took. I mean, Europe and there in Switzerland, obviously quite a history of gold moving around Europe during that period of time. Do they have a case, by the way? I don't know if you follow the historical ramifications of this, but does Greece have a case that they should get their 100 tons of gold back from Germany?
You know, whether they have a case or not, they're not going to get it back. It's as simple as that. It's just like they're not going to get this 1.2 billion repayment that they're now claiming back, that they repaid of their debt, you know, yesterday.
But let's say Greece leaves the euro. First of all, should Greece leave the euro? That's my first question. My second question is, if they go back to the drachma, doesn't it make sense for them to go back to a silver-backed or a gold-backed drachma or something like that?
It would do, but I don't think they will. They haven't got the strength, and they haven't got the amount of silver or gold to do that. So I think they should just have a free-floating currency that comes down to a level where Greece can prosper again and export their goods, and they have to start from a much lower level.
Let me ask another political question, okay? You say that gold supplies are strained. You say that you have customers, they want a 400-ounce bar of gold, and allocated. That is to say, it's an actual.
It's in their name.
It's in their name. To source that, you know, you just can't pick up the phone and source that. There's a bit of a bottleneck.
No, I'm not saying that, because I'm saying that we buy directly from the refiners, and the refiners get 2,500 tons every year of gold, because they are the ones who get the gold that is mined, and then they get on top of that scrap gold. So if you have a good relationship with a refiner, you will always get gold.
So that's the value added there at Gold Switzerland. You actually deal with the refiners.
Absolutely, we
so
buy direct.
So if I showed up, a billionaire showed up and said I need $1 billion in gold,
absolutely,
you could actually source that. That's why people come to you, to your shop, as it were, up there in Switzerland. Is there? But my question is that if there's a constraint on the actual physical delivery of gold out there, and there's certain bottlenecks, people can't get their gold. What is the alternative for them?
The alternative? If they can't actually get the gold, well, silver, but there's even a bigger shortage of silver because silver is not stocked anywhere. So, I mean, silver will explode at some point. In my view, silver is not the same type of wealth preservation as gold, because it's so, first of all, volatile. Secondly, all over Europe there's VAT on it, so you can't take it out of the vault and trade it in the same way because you have to pay the VAT then on it. But silver has massive potential. So what's the alternative for people? Well, sadly, it's stocking food. It will come to that. Because for normal people, they can't afford to, they haven't got that much money anyway. So the only thing is, food will become expensive. I have to, I'll tell you why. I'm in the hyperinflationary camp because when currencies collapse, eventually that leads to hyperinflation. Now everybody will say, well, the US is not printing money, so we are not going to have hyperinflation. Well, look at the US. This country, which is now, everybody says is absolutely now booming. Let's look at it. It has never had a budget surplus since the early 1960s. Not a single one. The Clintons' year surplus was not a real surplus. Debt still went up. It's not had a trade surplus since the 70s. Real GDP measured with real inflation is coming down continuously. Real wages have been down for the last 30 years. It's the rich getting richer, which and it's printed money and credit that's creating this boom, and of course, therefore, for going into we have inflation. Of course, we have inflation in assets. We have stock market and property market.
I know. I just remembered what I was going to say a moment ago. These big gold bars. If there are people having trouble sourcing these big gold bars. Is this also leading up to political conflict? Because you see, for example, in Ukraine, this is a war that was created to sell weapons and nothing else. There's no ideology behind it. And Victoria Nuland did a coup in Ukraine, and now they're sending Humvees to Ukraine. To me, it's like because the economies are collapsing as you described them, instead of doing the long-term planning of doing infrastructure builds in the U.S., et cetera, they want the quick fix, which is war. War is always the quick fix. Yeah. So is the inability to source gold for those who are not in your position, who are dealing directly with refineries, does this telegraphing to us this war mentality? Because folks, to keep the whole thing rolling, they still need that gold, and so this is leading to war. Can you make a connection between the two?
Well, we know that throughout history, governments under pressure with a dire financial position have always started war, because this is the way to print more money. I mean, the U.S. will print more money, whatever anybody says.
Would you put the Ukraine in that camp?
Ukraine is in that camp. And when you say absolutely...
Purely an excuse to print money.
And definitely that will be. But and now, now the House, the representatives just voted through arms to Ukraine. And as you know, Russia saying we're not going to accept that. So, I mean, the geopolitical situation, on top of the economic and financial, which is dire, the geopolitical situation in the world is extremely dangerous. And even I'm getting worried. It takes a lot. And, it's not just Ukraine and Russia. You look at Yemen now. Yemen is now, the president has fled. They're now, they're going to threaten Saudi Arabia. Saudi Arabia putting troops there. Saudi Arabia is also threatened from the north. ISIS might start getting into Saudi Arabia. And then you have Northern Africa. I mean, I could see that William Rees-Mogg, who was a famous historian and editor of the Sunday Times, he wrote a book in the early 1990s called The Great Reckoning. And there he predicted that there will be mass migration from North Africa into Europe. I see that coming now. I see the boat people coming. I see that not being stopped. So the world is going to change. It's going to be a much more dangerous world.
Right, and the single greatest way one can protect their wealth, purchasing power, is to buy some frickin' gold. I mean, that's just the bottom line, because throughout history, every single fiat money currency has always gone to zero. And then we got to cut it off there. Egon, thanks so much again for being on the Keiser Report.
Okay, thank you very much.